It's so nonchalant.
All right, I think we are live. And I think we're live this morning. Good morning, everybody. Happy Thursday, August 19th. I guess it's about 8:30 right now. We're sitting with a good buddy of mine, Doug Woodcock, who previously drilling engineer for what? Where'd you start? Anadarko, right?
Shell first,
Shell first,
then Anadarko,
then
Carrizo,
then Carrizo, then Cowan. He has since left the E&P operations side of the industry, and he is now finance bro at.
We'll be starting next year full time with Moelis.
All right,
Just finished my internship, so currently stay at home dad and student, I guess you could say.
All right, well let's say hi to some folks that are tuning in right now. We got an old Shane Schur, an old Heights Ice baby, MS Directional, saying morning boys, morning Shane buddy, miss you bud. Austin Bryant, morning boys. Austin, how are you doing, buddy? Thanks for tuning in, everyone. Jordan, I owe you a call back, man. My bad. I apologize. And we got Aaron Baxter. Sup, Doug? All right, I dig that. We got some people chiming in right now. So, yeah. So pretty much before we begin, I got to say that Breakfast Runs is brought to you by Connection Crew. Jonathan Rhodes. Good morning from Tiki. Jonathan, I'm assuming you're having a cup of coffee on the water, listening to this on your phone, man. You're definitely living the dream. Definitely jealous of that. Here we go. We got Bob Godblot saying, morning, fellas. Morning, Bob. And pretty much, as I was saying before, Breakfast Runs is brought to you by Connection Crew. Connection Crew can help with content creation, brand promotion, outsourced business development, and also unique networking events that apparently from this week that I've heard about OTC, the attendance there. I think there's a need for that in our industry. So let's see. We got old Roy chiming in. Good morning from Judah and Pearland. Hey, what's going on, Roy? Probably having some Black Rifle coffee. And then Bo saying, love the Breakfast Runs. Man, we appreciate that. We appreciate all the support. So Breakfast Runs, for those that don't know, are out there. Was when oil field service companies would get inside the break room of operators, have banter. Mainly it'll start around hunting and fishing. It'll go into operations. It'll segue out into asking for a potential lunch eventually at some point. Am I wrong? Am I right? That's kind of the gist of it. So,
Yep.
So we decided to, instead of getting in offices these days, which you can't do anymore, Connection Crew, hint Connection Crew, we decided to bring it to you wherever you're at right now. So we hope you're enjoying a cup of coffee. We're actually live streaming here from Tenfold Coffee up in Houston Heights. This cat's decision, so we're doing this. And we got Paul Moore saying, where's Paul?
Stanton.
We got Perry Dillon saying, good morning, guys. Thanks for hosting. We got Paul saying, good morning from Stanton, Texas. All right. Well, let's kick this off. So, Doug, first off, great seeing you. He's a new father. How's that going for you?
It's going good.
How old's your baby?
Baby's 10 weeks.
Oh, so you're still in the woods.
A little bit. He's sleeping maybe 5-6 hours. So,
did you do one of those newborn baby photo shoots?
We reluctantly did.
No. That's a pretty standard thing. But you know what's funny about those? It's like
We shopped around though. Because some people want like $3,000.
I know, and some people will pay that, which is fine. If y'all do that, that's fine. I mean, it's $100 oil stuff right there, but it's you know what's funny about that? It's like you look at those like baby pictures, and like the child looks so peaceful and sleeping. The parents are like this with a newborn baby, right? Happy, but behind the scenes, we know it's a nightmare. Parents know it's a nightmare. It's no rest. You're going a mile a minute. You got to clean 500 bottles if you're not breastfeeding. So it's a challenge. So
yeah, much more respect for everybody that's had kids that had to deal with me over the years.
You know what I've realized? I've realized since I've had kids, it's like kind of like before when I like watch zombie movies. You know what I mean? And like the dad would leave the kid. I'd be like, dude, go save yourself, man. Don't worry about the kid. Now when I watch it, I'm like, nope, turn back around. So anyway, man. That's just my little spiel. So it's good, man. You like being a father?
Yeah, been good. It's crazy because we actually had him the night before I started my internship at the bank this summer. And
so before you stepped out in your first role as a finance, do you mind being called a finance bro? Is that okay? Can I do that?
Yeah, finance bro. That's fine.
You know what? You're earning that. I dig it. Yeah. So, all right. So let's think about this. So you were at Callan, and you decided to make a career change, a pivot, if you will. That's oil and gas hot term these days, a pivot into the finance world. Man, tell us about that.
Yeah, so I think most know that I was at Carrizo prior to the Callan acquisition, and so I think last year and a half's been pretty wild for us. We with the acquisition got pulled back to Houston, and then the pandemic hit, and the most recent bust happened, and then I just kind of decided that my situation wasn't really going the way I wanted. Just decided to kind of take it into my own hands. It's kind of like sitting it's not really like playing cards, but like it's like sitting at a card table and you're like, playing for 8 hours and like you still haven't gotten
where you need to be,
the perfect hand or whatever.
All right.
You're like, I think I'm just going to get up.
No, that's a good description. I like
go kind of make your own deal. And so I went to Rice. Really, business school was only really one choice here because I'd already dragged my wife around from Houston to Midland back to Houston. She's an attorney. And I'm like, all right, we're in Houston now. So, and Rice has pretty good, pipeline to the Houston energy banking scene. And that I kind of decided to go forward with that during the pandemic when we were running, 0 rigs, and
so
kind of took advantage of that time.
So tell me about that. So have you always been interested in the finance side? So why'd you choose to be a finance bro?
Yeah. So I guess even back at Vandy in undergrad, I recruited for banking, but I was an engineer. I was a chemical engineer. And, coming out of school, it's kind of weird. Nowadays, you kind of see, didn't really matter where you started. You might have had an engineer, the guy's doing something else, or he's an entrepreneur.
Oh, like pretty much degrees didn't matter.
Yeah. Now degrees really kind of, people do kind of whatever. Once you get in,
you don't stick to your discipline.
You kind of go off on your path.
Right.
Well, coming out of school, it's kind of like, well, why do you want to? Engineers don't become bankers,
right.
They become, ops. So it didn't really work out. I was always interested in that side of things. And then I kind of got lost in the whole drilling world. I mean, there's a lot to learn.
That's an easy world to get lost in, I'd imagine.
Bury your head in the sand and, popped up like, 6 years later. It's like, oh, okay. I know where I am again. So anyway, so just kind of went back to what I really wanted to do long term, and I just felt like that was probably the best way to do it. And I could have maybe stayed in and hoped to get lucky, hope to get the next hand.
Hope to get the hand that you want.
But I was like, no, I'm going to go pick a different casino. So I kind of switched gears, and it worked out. Recruited the bank scene and was able to get lucky enough to get a spot with Mullis this summer. And
were they seeing a lot of people, I guess, try to get into the finance world? I guess from the E&P side, were they seeing a lot of, I guess, recruitment out there?
I think there's always a steady stream of guys coming from the E&P ops world. I would say it might have been a little heavier this year. I know like business schools just in general are at like all-time high admissions and stuff. Interest, just because I think the pandemic kind of offered like
a break in employment too, maybe.
Maybe by choice or not by choice. I would say there might be a little bit more interest that way. But now you got oil coming back to $70 or $65. I think there's still some backwardation in the curve. People long term think it's still 50s. But
people you definitely feel that people still feel like it's in the 50s, and it's kind of slipping. Yeah,
people aren't really like believing the 70.
Yeah.
Gas is different. I think people are believing the gas story. If you look out, $3 to $4 gas is pretty nice.
Yeah.
So, there's a little bit of light, I think, on the gas side, and it plays in the whole political realm of, cleaner energy and stuff like that. So, I think I'm a little bit more, bullish gas, which is funny because I think I joined in 13 and the whole idea was like get liquids rich stuff. You know, people were like ditching the gas.
So this is completely
and now it's like
topsy-turvy.
Shoot, like, maybe we should have kept some of that gas.
So I guess, I mean, you're talking about this, people feeling like it's $50 oil, but it's actually 70 and all that stuff. And now you're on you're a recent finance bro. So I don't want to speak too much to your company. I kind of want to get a kind of a broad picture of what that world is seeing when it comes to like, okay, we're at 70. I mean, obviously I don't know. I'm not a finance bro, but we're at 70, people feel like we're at 50. Is there going to be a tipping point, or you feel like it's going to be a slow trickle for capital to come back in the market, and what's going to be driving that? That's a great question.
Yeah, that's a really tough, big question.
We always ask tough questions.
I watched I don't know if anybody in Houston here watches the Blitz. It's a 97.5 The Blitz.
Oh yeah, okay.
And in the beginning of each little segment, they're like some like dark deep voice comes in. They're like, the views of AJ and Fred Fowler don't reflect that of Gal Media. Well, this is kind of my chance to say like the views of
it's
what
a
I'm
disclaimer.
about to say.
So this is a disclaimer right now.
Let's not reflect that of
and
any associations of mine. But
well, no. I want to clarify that. So coming on here, I just said, hey man, I don't want to speak to your company's position or anything like that. You just got in. I want to hear from what you're reading online, what your intake is, because Doug is one of the smartest guys out there. So I just kind of want to get his insights on what's transpiring right now. So So this is not his company. This is him.
So. Look, I mean, I think even the finance bros don't know what the strip price looks like. I think the strip price kind of may be a better indicator of sentiment of the industry. I'm like if you look at the curve right now, it was up at 70, and then it kind of goes down to 50 and hangs out. Well, obviously we know it's actually going to do this the whole time anyway,
right?
Just from history, and so I think that might be a better indicator of kind of where people are seeing valuations and where they're willing to go. And then you'll have people on both ends of the spectrum. Bulls that might think, I don't believe that it's down in the 50s. I think this thing's going to ride out in 70. They might have a different view of the world than some other people just want totally out. And I think you're seeing a lot of, there's some folks like some big private guys that are just like, no, we're out. I think Blackstone has sold out of a lot of positions recently. And you're kind of seeing this sort of interesting dynamic with the way that people are viewing these strip prices, and then the way that you're getting these sort of movements in capital. And so like, so you look at some of the big guys looking to get out, it doesn't fit their ESG.
Is that what it is? It's kind of a question of it's not fitting their moral compass, because fossil fuels are all bad. We're the worst people out there, so we're not going to invest any capital.
Yeah, I think it's a little bit that. I mean, to some degree, it's, if you really look at it, I mean, it's not really the fund, I'm speaking broadly, but it's not really the fund that's driving some of these dynamics. It's all of the big investment communities that put their money in these funds that they have to cater to.
Okay.
And they're saying, no, we want this. And you see that in academia too, with the endowments. Like, students are protesting the investment in fossil fuels with their university's endowment. And there's some big money there. I mean, tens of billions of dollars at some of these big private universities.
So do you see, I guess, the momentum kind of shifting back into our industry, or just one of the,
what I think is that you have people that are so desperate to get out for whatever reason, whether that's, an ESG reason, whether that's, a disbelief in the returns. I mean, if we look at it, generally returns in oil and gas have been fairly poor for the general investor over the last decade.
Right.
So there's some people that just say, look, I don't want to be in it because we were in it. It didn't work. I didn't like it. Yeah. Let's go do something else.
So they got a bad taste in their mouth.
and the interesting thing about it is you're seeing the valuations come down to such a degree that actually like traditional oil and gas looks pretty damn good right now. Like you look at like some of these deals in the Haynesville, for instance, like you're getting world-class gas assets and people aren't valuing the development reg. So it's just, you're basically just paying for PDP, and you're paying like, I'll give some comparisons here, but like in the Haynesville, they were just earlier this year, we were looking at like $2,000, $3,000 per flowing BOE.
All right.
And, in comparison to a recent deal in the Delaware, that was just announced. I think they paid $44,000 per BOE.
God.
And so that's and that's in the Permian. And so, you start, I think that, Chesapeake took out Vine at $10,000 a BOE. So you're starting to see the Haynesville creep up a little bit. So, you can see the market starting to believe a little bit in the development story, but it's still fairly suppressed from, the heydays.
Right.
So if you're a traditional guy, you're kind of looking at this thing like, wow, this stuff's on sale. Like this stuff's cheap. If we go back, this is like before my time, but if you go back 30 years, a little company called Hillcorp was buying up a bunch of stripper wells, and the price came back and they were sitting on gold. If you own 3,000 wells and you're making no money, and then all of a sudden the price of oil triples, 3,000 times 1 or 2 barrels a day looks pretty damn good.
So you're kind of seeing this market as kind of an opportunity right now.
Yeah, there's kind of both sides.
Yeah.
Right? There's people that are leaving, and because they're leaving, the asset prices have come down. And because, so if you're somewhat bullish and you see a lot of these strategies, these PDP aggregation strategies, like there's a company out there called Diversified that does this. They just bought assets. Actually, Moelis just sold the Tanos position, which is quantum backed, to Diversified. And basically, Diversified is a PDP aggregator. They buy this stuff up. They're going to produce what's there. They're not going to develop that much, and they're going to just kind of print the cash. So they're looking at aggregating all these cheap flowing positions. So you're seeing that kind of come back, which is just the same playbook as the Hillcorp days.
20, 30 years. Yeah.
Just buy this stuff up. If the price comes back, you're holding an option on, commodity price. If it doesn't, you didn't overpay.
Yeah.
And so that's kind of an interesting strategy. Let's see if it works this time around. History repeats itself until it doesn't.
Yeah.
So, I think it's a good strategy. You're getting good value. But at the same time, so a lot of that stuff is like these private guys are getting out, right? And so it's creating this opportunity for investors that see value in the space.
So that's not going to be the traditional way to raise capital anymore, or for the short term.
Yeah, I mean, so I don't think a lot of people are able to raise capital. I mean, Vine did earlier in the public markets. They IPO'd, and now looking at it, was that just a way to sort of make themselves look a little? I don't know if they were doing that to do some sort of shifting around of the finances to look better for sale, because obviously they just sold to Chesapeake. But yeah, I mean, public markets are tough. I think it's going to be very private going forward, and it's going to be new privates. It's going to be guys that see value in what's going on and are willing to maybe lean into that a little bit. And some of the old traditional guys may be looking to get out.
So they're leaning into more the actual practical economics of things versus the reputation.
Yeah, I think so.
The untrue reputation.
Yeah, and then you also just see guys that day in and day out they're like when there's blood in the water, they're there, right? So. You have some of those similar names like hanging around the basket, but yeah, I mean the Permian is just it's just crazy to me. I mean, like this deal. I'm not going to name names, but I mean, $44,000 a BOE, and you know, it's kind of like when you go to Specs and you're looking at the wine and you're like, yeah, I want a cab.
Yeah.
And you're like, you know, you look at the Napa tag on there and it's like, this bottle is like twice as expensive as this one over here from, you know,
probably the same vineyard,
South Africa, or
okay,
or some maybe Sonoma like trade at a discount to Napa, right? But it's like it's the same shit, you know. It's like it's oil and gas, like, you know, and so and especially if you're paying for per flowing barrel, right? Like if you're not going to develop anything, there's not that much to develop. Like if I'm buying gas here or there, like it's there.
Yeah.
It's the same stuff, but you're paying this premium for that Napa name, right? And it's just kind of interesting. Like that's back now. Like you're seeing that, and we're like, you know, Chesapeake is getting Vine at 10,000, and you know, people are buying the Permian at 4 times the cost, and it's just interesting to see, like, you know, why is that the case? I really don't know.
Wine's wine. I guess it's a hot spot. Everyone wants to be out there. Everyone wants to pay that price and sit at that table.
So it's just kind of interesting to watch, but yeah, I think Houston's in a good spot right now, and you know, we're tied into all that Gulf Coast gas. There's a lot of LNG capacity being built right now. I think Asia is really interested in, you know, LNG stuff.
Yep.
And so that's good for us because we have a lot of gas and we're a global leader in LNG. So I think that's going to be kind of an interesting thing. And then all the Gulf Coast upstream assets that tie in right there at all the LNG export is starting to look really good. You know, like if I have a choice of Pennsylvania gas or Marcellus or, you know, Utica or whatever, or the Haynesville, or even like the Eagle Ford gas window, you know, I'm going Gulf Coast because the midstream capacity is there.
It's there,
You're not getting trimmed, you know, by the differentials. Whereas like in the Marcellus, like you're getting generally $1 cut off the Henry Hub price. So gas, you know, Henry Hub might be $4, but you're only getting 3, the wellhead in Pennsylvania. In Haynesville, you're getting $4.
Yeah.
Henry Hub.
Yeah.
And it's the same kind of problem in the Permian. We saw that a couple of years ago with the Waha problem. You know, people were paying people to take their gas. Like you weren't selling gas. Gas was like an operational cost.
Yeah, you're trying to get rid of it.
And so, like, I think that's going to be an interesting dynamic to watch.
So you're optimistic. Right now, we're kind of in a weird phase right now until people, I guess, new investors kind of get comfortable coming in, you know, and the old investors that aren't going to be in our community anymore kind of get out. So right now, we're just kind of a transitional period. So right now, but you're pretty optimistic.
I'm fairly optimistic about certain Yeah.
Okay. And, you know, I'll take that.
It's very it's going to be in specific situations. Like I don't like every situation, but I think there's some good money to be made.
Okay. All right. So you're here first on breakfast runs, but let's take some questions. We got Justin Gauthier, who's dropping smart questions this morning, probably because he's in school and wants to flex that he's in school, his muscles in school. Probably sitting there at his house with no shirt on. All right. Thoughts on 2022. Currently, folks are generating FCF and gaining investor confidence, but with production declines coming and increase in oil demand increasing over time. Great English, Justin. Will we go back to growth mode, or will U.S. unconventional remain disciplined? Someone's in school.
Remain disciplined.
Yeah.
So I think I saw like a GIF or one of those like voiceover cartoon videos from like OFS Twitter or something last year, and it was like this cartoon. I don't even know the cartoon. It was like some space cartoon, and like there was this big red button And like if he pressed it, like,
oh, is that the one he's wiping his brow? There's two options.
Yeah. And he's like, oh God, like what to do? And I think one of them like shoots the rocket off, and like one of them doesn't.
Well, it's are you gonna do the same thing and have the same results? Pretty much. Yeah.
And he's just and the guy's like sitting there. One's like drill, and one's like
Maintaining cash flows.
be disciplined. And like there's all these people like chirping, like, no, don't do it. And he's just like, drill.
Either one, you're wrong.
It's a good question. I think that so if you think about like the general investor, over the last decade, they probably didn't understand shale very well. They hadn't been burned that badly. I think, in 2019, the parent-child thing like finally got into the brain of like a normal, like a guy that's not
person.
Yeah, you're not in the field. You don't drill wells for a living. So like they finally were like, okay, we know what parent-child is. So I think the general investor is a little bit more educated now on the risks. I think that they're going to be very scared to see companies guide CapEx up. Like, I just think, if I'm an investor in a company that, especially with a backwardated curve, and by backwardated, I mean like the strip curve is down and, from today, it's looking into the future, it's coming down. I mean, especially in that environment, if I'm seeing a company raising CapEx guidance, I'm starting to get concerned.
Okay.
Like, because that means that I'm not going to get cash. So I think that, and frankly, I don't think a lot of companies that are able to do that, the ones that are known to do that can no longer really do that because they're still dealing with so much leverage problems that the risk of doing that just sends them over the cliff if things don't work out. So it'll be interesting to watch. I think there will be a behavioral change in the U.S.
How we operate.
I think that this growth at all costs thing is going to be it's going to be looked at much more finely.
I think that mind shift has shifted, not just since 2020, but I remember like in 2019, that operate within cash flow conversations really began to kind of pick up around the oil field. It feels like we were learning our lesson and we were operating actual like businesses should, but then we got kind of double dom.
Yeah, it's really funny because if you look at the traditional oil and gas investment, it's like 10 years of negative cash flows, tons of investment. And then on the end, you get this huge swing of revenue coming up, you start making oil, and the field is printing cash. But it's funny in shale, like with the declines, the way that it happens, it's not really that, big investment up front and then cash. It's like, lots of investment all the time.
Yes.
And so, it's kind of a different model. And, I think the companies that did it well, Diamondback, EOG, these are companies that manage cash very well. And they were rewarded for it in the market. And so I think you have a lot of people trying to copy that.
Kind of emulate that type of model. All right. Let's get, Danny Slinger says, oil is oil. This is referring to the wine comment, but their access to pipeline might be a factor.
Yeah.
All right. And we also chimes in with another zinger. What do you think about sustainable oil, carbon neutral, demanding a higher price?
I don't know.
We don't know. And that's okay. We don't know.
I think that it won't be a concept that the free market makes. I think it will have to be regulated to a certain degree.
Regulation. We love that. And what else you got for us? Does anyone else have any questions or want to say hello to Doug or anything like that? Chime in right now, because if not, I'm going to have him kind of wrap us up and get about our day, because he's got to do daddy duty. I like old Perry's comment right here. If oil gets high enough, more density will be drilled in West Texas than teeth. Oof. All right. I dig that. So Doug, first off, I want to thank you for coming on, man. I'm curious to watch your kind of career path evolve and grow in finance, bro. Yeah, thanks for being here. Good recommendation on a Tenfold Coffee Company in the
you can't even see it. Whatever.
In the Heights. Good little spot. They were accommodating to us and turned down the music. And I'm also going live today at 2 o'clock with Joe Sinnott from Whiting Partners. All right. And I know I messed it up. It's Whiting Partners. Sorry, Joe. I love you. I'm looking forward to tagging up with you, dude. So, again, at 2 o'clock today, we're going to be going live from Nate with a cocktail. Join us if you can. And, Doug, man, I appreciate your outlook. It was kind of, again, one of those, yeah, we're optimistic, but it's going to take a little bit in order to start feeling that optimism, right?
Yeah, I think so.
That's a good way to put it. So, man, I look forward to watching, I guess, your career go. Let's stay in touch. Thanks for coming on, and let's get you on. Well, Jared, thanks, buddy. Great information shared, guys. Man, I appreciate that. I just had lunch with this guy yesterday, and really connected, man. This always willing to help out and add some value. So anyway, want to thank everyone for tuning in. I look forward to staying in touch with you. And I wouldn't mind getting you back on the show again, like sporadically, and just kind of having these conversations because, I mean, we can only read so many articles on LinkedIn.
Market update.
Yeah, a little market update. We can only read so many articles on LinkedIn and share them because we all know the oil prices. So anyway, we appreciate everyone tuning in. And again, check out Connection Crew. And what else? Is that it?
That's all.
All right.
All she wrote.
Maybe see y'all at 2 o'clock today. Looking forward to it. All right, buddy. We appreciate it. Talk to everyone soon. Have a good day.